Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 17th of August, 2021. This is episode number 2053. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning coming in, we have a market that is clearly risk off. The Russell leading the pack down in the indices, down 91 basis points, followed by the NASDAQ. NASDAQ's off 96 points, the S&P 21 and a half. The S&P still trading within yesterday's range, so is the NASDAQ. The NASDAQ's moving into the middle distribution of yesterday, which spans from 15,050 all the way down to 14,980. So we're trading in range of yesterday's run up, very strong run up, in fact. What do we have going on pre-market? Walmart, C, and Home Depot all reported after the close. Amcor, Agilent, and Alcon report. The main pieces that are on the minds of market participants are that the Delta variant is breaking through at a high rate, even to those who are vaccinated, called breakthrough cases. And but still, with the vaccine, the percentage of people who are needing intervention is very, very, very low. But still, this is going to give the market jitters, as it may result in further restrictions, shutdowns, which could impact consumer behavior and the economy in general, productivity, and so on and so forth. The other piece is we keep getting sold off. We keep getting sold off on the overnight session as China and the Asian markets show weakness. We come in on weakness and we end up turning it around. And we end up turning it around at some point in the day. Yesterday, we ended up with a new all-time high by quite a bit. And so it's kind of an interesting market to be in. It's relatively quiet, and then it just tears in the opposite direction. Very clear bottom yesterday, excess low yesterday, and a push. So it's not an easy trade right now with so much input. Crude oil still trading at $67, off again today, 29 cents. Gold remains below the $1,800 mark. Copper was down as far as 2.2% this morning. Bitcoin and Ether are still holding on to their gains despite the volatility. And then what's on deck for today? We have industrial production in about 10 minutes. NAHB Housing Market Index and business inventories at 10 a.m. Fed's Chair Powell at 1:30 Eastern. Fed's Kashkari at 3:45. That's 15 minutes before the cash close. And then this evening, we get the Japanese balance of trade, machinery orders, and exports at 7:50 p.m. The S&P has a B shape. That is long liquidation. 1 second, let me clear my throat. Sorry about that. The S&P showing long liquidation on a B-shaped profile, coming in on really good volume, 206,000 contracts. The overnight inventory is 100% short, with the range that is showing that it's outside of what we would call the mode or the most common in the overnight session, which is limited at 23 points, as you can see in the overnight stats in front of you in the middle of the page here. So that's where that stands. We're shaping up to have a pretty decent open, a good day to pay attention at the open. Here's what we looked at yesterday. Key levels, 37, 33, and the almighty 30. Below 54, 62, and 59 above. Nothing worked out the way I had expected yesterday. Yesterday looked like scenario two, pushing into 33. As you can see here, the low yesterday was somewhere around 32 and a half, 32 and a half versus the 33. But I expected it to close weak after being unable to fill the gap at 54. That's what I expected. That's what we normally would see. And what we had yesterday is it pushed into 33, came back, crossed the entire range of Friday, and through the all time high at 63 or so, and pushing all the way up into 74, 75 right here. That whole reversal, completely unexpected. It's just it's amazing that it does that. Um, so that's where we stand. So yesterday looked like a gap and go situation down, and it ended up reversing in the afternoon. Again, we ended up teasing into the 33, almost getting to the 30. Below the 30, I expect a flush, a slight flush. There's quite a bit of volume that is traded here. A couple of icebergs that went off for about 4,000 each. And so this area is expected to see a flush if we break through the 30. Okay, here's where we are in the current situation. So this was yesterday as reviewed. So we had a gap open. We had a gap open here from the prior low at 54 and a quarter down into 44, 49 and a quarter open, and we see that we extended down. So again, this is a gap and go situation. We're looking short in this situation, not looking for areas to get long to fade this. Is my sound low? Because my indications here is that the sound is relatively strong. There may be some reverb or slight echo because of the big TV that's in front of me reflecting sound back. But um, overall, if the sound is low, I suggest you adjust your gain on your side. So we end up pushing down. So we're looking for another leg down and then expecting it to kind of consolidate and go sideways for the rest of the session. That's what was expected yesterday down into 34. Remember, 37, 33, and 30. And those are the areas that we're expecting the market to push into to test and look for support. And so to me, this looked like it was done with the higher low. This kind of set up a trigger long right here back into the mid. Those of you who are convergent saw that I said, hey, I don't have all that much conviction in getting short in this area into the mid yesterday. Let me throw that on here. Getting short into the mid, and it ended up pushing to full session VWAP before falling through. So to me, this became muddled right here and difficult to read. And then, of course, once it broke through the mid, the pullback is the play. It was looking for neutral. I talked about high probability neutral and a push into 54. But I just didn't see a way to get on this choo-choo train here to 44.74.75 or 44.75. The delta, despite this move, the delta was finished relatively flat. I want to repeat here that this is boring stuff. It's boring stuff. The viewership of the Trader Bite has fallen quite a bit, which is totally understandable. But you know what? Let's put things in context. We are in the dog days of summer. This is, middle to late August is when summer starts to drag on, right? Because there's not much to commit to at this point, and so it's kind of a repetition every day. It's like a Groundhog's Day coming in here, and so I know that it's a boring trade. It is. This is the type of thing where it would probably make sense to go on and look at, discuss other markets. But our success is predicated, and I really mean this, our success is predicated on process and routine. And so we come in here doing the same thing day in, day out, because that is the core of success. There's no sense in getting glitzy or getting changing things up or doing circus tricks. I'm not here for entertainment. Um, and so I'm not saying this in defense of the trader bite itself. I'm talking about the market in general. The market in general this time of year causes traders to commit errors. And the issue here is that things pick up in middle to late September, and then you have the usually traditionally one of the most volatile months, October. Once Q3 is done, October, they come in and the generally participants need to dress up for the rest of the year for their annual performance statistics. So October is a commitment month. So the idea here is to just make it through the summer, right? This summer, actually, we've had a little more opportunity than I would expect. Last summer was special, a very, very special summer because of the pandemic and so on, and there was a lot to price in. But this summer, relatively muted, and overall earnings have been strong. Overall performance has been good, and the market's complacent. We keep pushing these highs every single week. We're making new highs, and that makes for a very boring trade. Granted, the VIX is still above 16. Normally, we'd see it around 12 or 10 at this point. But the most important thing for you as a trader is to stick to your routine, stick to what you're doing. Yes, you can change products. Eventually, as a professional, you want to trade bigger and bigger and bigger in your main product. And then at some point, you're going to want to go horizontal and trade a breadth of products. So if you need to switch to, the Russell or whatever to suit your style, if you're not seeing opportunities in the ES, it makes sense to do so during the summer. Do the homework, practice for when things pick up. But don't get complacent here. It's not about, getting some action. It's about staying abreast with what's going on with the market and staying focused on refining the process, eliminating errors, and so on. Why? Because that's where success is likely to come from if it does. So I wanted to take a moment there and just remind you that it is as it's expected. It is as it's expected that this is likely to be quite slow this time of year. So just hang in there and follow the auction. At some point, this can change, and that change happens quickly. And when that change happens, in my experience, it does not give you time to figure out what has been going on because your attention is elsewhere. So we want to keep up and see that we keep making new highs, falling into balance, poking below, pushing back into balance, pushing new highs on a weekly basis. But when this thing breaks, it'll likely be a 2 to 3% day with a strong bounce that is weak and then a continuation lower. We have not seen this thing break in about 10 years, but it's just the nature of the market, right? There's a lot of money flowing around. By the way, corporations are hanging on to massive amounts of money that can be deployed, that remains to be deployed. So there's just no end in sight in terms of stocks pushing lower. Okay, so keep an eye on the weekly 52-week highs and so on to get a broader view and then narrow it down to what could be influencing the current market, which is what we cover in a Trader Bite every day. So what did we do? We closed on a neutral extreme up day. Yesterday was a neutral extreme up day, and that's quite bullish. So the expectation overnight is that it'll likely continue to float higher because it did not find sellers into the close yesterday. So we expect it to continue to advertise higher prices. But what it's been doing is it's been coming off just like it did on Sunday night. It's kind of been coming off. It starts to come off right off the open. Here we held steady. Here we held steady, but it's been relatively weak coming off of the reopen, especially during the Asian session, and then holding around the point of control and then turning up later in the session. We'll see what it does today. We'll see what it does today, but what we have here is what is called a B-shaped profile. You can see that much of the acceptance is occurring in the lower end of the range, and this is long liquidation. This is a long liquidation profile type where the market seeks prices lower and then finds the opposing side. So you can see we put in a low at 44.47 and a higher low right here at 44.47.50, and we're holding steady. So we seem to have found balance. And so it's important to see if the participants come in and breach this 44.47 into the open, which is likely to lead us to where the last place we found balance, which is the point of control from yesterday, which is at 44.37. Remember, yesterday I talked about 37, 33. The low was 32.50 or something, and then 30. Now, if we take out the 30, yesterday was a lower low to the prior day, so that threatened the one-time framing up. So it started to kind of break the trend up, and then it finished at all-time highs. Today, it may make an attempt at that low again and breach and push into 37. We want to see how does it treat that 30 again. So that's what's important down here. We're looking at 37 again, 33 again, and 30. This is an important zone, an important support zone that we want to see. We want to see what the market does there. So just keep that in mind. Overall, pretty clear trend. We're below VWAP, below the point of control. The point of control is shifted down. We're inside of yesterday's trend range. So we have pushed up and pushed back down. And it's important to watch to see what is likely to happen on the open. The open is going to be very telling today. Just to make sure we keep our eye on the ball, excuse me, my throat. You want to make sure you keep an eye on the composite every day. And look at that composite, pretty strong. One-time framing up on the weekly. The daily breached yesterday. So it's hard to say what it wants to do. Yesterday was a wide-ranging body, was a wide-ranging day, and we're opening in the middle of it. And so if we don't open up and push into this upper distribution, somewhere around 44.60, this nub you see right here, if we don't push into that this morning and take it, we are likely to turn down. We're likely to turn down towards the 37. Remember last week's point of control, composite point of control, right at the 38. Yesterday's point of control, right at the 37. We are liking and accepting the 37 area, and that is a very important fact to remember. So there's a magnet from 47 to 37. The question is this morning, do we go there on the open? If we don't go there on the open and we hold above and start to turn up, then you're looking for this 60 area, 44.60 area to be tested. And if the 44.60 does not pose resistance and steps out of the way, then we're looking at new all-time highs. And that's how the plan is likely to go. So let's take a look at what's expected for today. Sorry, my computer here By the way, my daughter starts at her new school this morning, so really summer's really coming to an end. She switches from daycare to her new school, and so this the doldrums are about to come to a close. So again, let me highlight what's important. We have the overnight point of control right here at 50, 54 or so. We have the 37, 37. We have the 33. We have the 30. And then from there, we have 20 as the next key test area. Okay? If we break the 30, the slide to 20 will be very quick. This will be a decent short. Above us, we have the 60 right in here. The 60 is key. And then from there, it's 75, and off to the races it goes. What are we looking for today? Open auction, expecting it to push immediately down on the open, consolidate, make an attempt, and then I'm looking for it to tag this 37. And if it tags the 37, it is likely to push to the 33 low. And then we're testing the 30. Again, this has been defended quite a bit for a slip down into 20, consolidate and hold here. This may retrace back up into the close as dip buyers step in. But overall, I'm expecting this thing after yesterday's strong push and the fact that we're opening below the middle of yesterday. This is demonstrating weakness. The secondary and open auction that tests below the 46 breaks through. We already took out that 47 low, so that's gone. Back to 54, consolidate, and then walk itself back into the balance from Friday. Consolidate here at the 60, and then start to squeeze back up into 66, 67, this area right here before it shifts sideways. So we're looking at the potential for an inside day today. Okay, so I'll leave you with those ideas. I want to remind you that tomorrow afternoon, after the close, I will be interviewing Kelly Farrell, a fund manager. We'll be talking about how she sees the markets, how she trades the markets as a fund. She's considered the higher time frame, or those people that really push the market around. It's a smaller fund, but it's the same perspective. It's all relative. Hopefully you'll sign up for that. You can reach it. You can get there at go2ct.pro/fund-manager. Hopefully you gained something today. Good luck, and I'll catch you tomorrow morning. Take care.